Hi, this is Matthew Cratter from Trader University, and today I want to talk about the latest Goldman Sachs report on Bitcoin and whether it's something you should be worried about. If you're interested in learning how to make money in both bull and bear markets, be sure to hit that subscribe button. So I've entitled this Goldman Sachs Squid Attacks Bitcoin. This is in reference to a famous 2009 Rolling Stones article by Matt Taibbi, where he refers to Goldman Sachs as a great vampire squid wrapped around the face of humanity, relentlessly jamming its blood funnel into anything that smells like money. I agree with Matt Taibbi on a lot of things, and I think Goldman is one of the more evil companies around, in spite of the fact that Blankfein used to say that they were doing God's work, which is pretty funny. Here's a page from the report. I've seen a couple copies of it on Twitter. Basically, they're saying they cannot recommend Bitcoin to any of their clients. Now, one problem with Bitcoin and crypto is that once people get into it, they tend to become fairly independent, and they don't rely on money managers as much. But we're going to kind of go through here and talk about some of the critique. I was a little worried when I first heard about this report, but after taking a look at it, at least the slides that I've seen, it really looks to me like it was written by a very, very junior analyst. It's almost laughable, a lot of the critiques. So I want to start by just talking a little bit about Goldman Sachs's background for those of you who are not familiar with their market calls and how accurate they have been over time. And I just noticed actually that Bitcoin's market cap, 172 billion, is more than twice as big as Goldman's market cap right now. It's a little bit ironic. Goldman is famous for their very, very bad calls. I don't know why anyone even listens to them. Here's a famous example from April of 2013, where Goldman downgrades Apple by removing it from its high conviction buy list. This was April 2013. We can see on the chart where this was. This was right here. And as you can see, Apple continued, just basically went up from there. So in many cases, you actually want to do the exact opposite of Goldman. There's some speculation, I don't know if it's true, that they issue these sell recommendations to push the price down of various assets or stocks in order to accumulate themselves. I wouldn't put it past them. I don't have any hard evidence of that. But in this case, certainly Apple, they called the bottom. Once they removed it from its list, Apple bottomed and it continued to go up. And then they added it back to their list in November of 2015. If we take a quick look at that, we can see that they added it back right around here. Bear with me here, November 15. So they added it right about here, and it had a very huge period, almost 1 year of underperformance before it finally went up again. So you shouldn't listen to Goldman about anything. The people who work there do not have a good history of making good calls. Another famous example from July of 2015, analyst at Goldman Sachs, actually a very famous guy who'd been there for a while, Jeffrey Curry, said that he expected gold to go below $1,000 an ounce. I've marked on the chart where he predicted this. Gold obviously never went below $1,000 an ounce and has actually just gone up since then. There was a tiny little low after that, but basically he nailed the low. So what does Goldman say about Bitcoin? Bitcoin does not generate cash flow like bonds. Well, it's not a bond. Lots of things don't generate cash flow. Right now, Goldman is bullish on gold. I'm a little bit worried about that, but gold doesn't generate cash flow either. Bitcoin does not generate any earnings through exposure to global economic growth. Well, of course it doesn't generate earnings. It's not a stock. I really have no idea who wrote this. Doesn't provide consistent diversification benefits given their unstable correlations. Actually, Bitcoin over short periods of time is correlated with the stock market. Over longer periods is highly uncorrelated. It has a correlation much closer to zero, which is why institutional investors talk about it. And have been adding it to their portfolio. The biggest critique they had in there was that crypto and Bitcoin in particular can be used for illicit activity. They talk about some Ponzi schemes. I have another YouTube video on Bitcoin, whether it's a Ponzi scheme or not, so I'll definitely link to that. It's quite ironic, actually, that they talk about money laundering and Ponzi schemes, etc. I think Tyler Winklevoss is a great example of this. So Goldman says that in 2019, 2.8 billion in Bitcoin was sent to currency exchanges from criminal entities. And then Tyler points out reminds us of the famous 1MDB scandal, in which Goldman facilitated the laundering of $6 billion. The main currency in the world that's used for terrorism, for drug money, and for money laundering is obviously the U.S. dollar. It's the world reserve currency, and this doesn't stop any of us from using U.S. dollars. Now, Bitcoin doesn't seem to have cared about this report. In fact, it's up quite sharply over the last 2 days. I've heard it said that there's nothing more persuasive than a bad argument, and I think what we see here is really a quite bad argument. And we will see. Time will tell whether Goldman has actually been accumulating Bitcoin after putting this report out. But Bitcoin's price action would suggest that someone is accumulating. And so I think when we're talking about Bitcoin, we have to keep in mind the other institutional investors on the street. Goldman is not really the best place to work anymore. It's not the coolest place to work. A lot of really smart people out of college are going to work in the Bitcoin industry or going to work for hedge funds or something. They're not going to work for these legacy banks. And as we know, Warren Buffett just dumped his Goldman Sachs shares, or at least most of them, recently. If we take a look at what's actually happening, what people are doing with their money, Kevin Rook had a great quote here where he pointed out a great tweet where he pointed out that since the May 2020 halving, only 12,337 new Bitcoins have been mined. Since that halving, since the same point in time, the GBTC, which is the Grayscale Bitcoin Trust, has bought almost 19,000 Bitcoin. So they're buying up not only all the new supply, but they're buying up additional supply. So they're taking about 100, as Whale Panda here points out, they're taking 150% of all the new coins off the market. And this is what you would expect at this point in the cycle. We're entering the most bullish part of the Bitcoin cycle. And if we look at, I think it's especially interesting if we look at GBTC, who the investors are. Now, I personally own Bitcoin itself. I don't like GBTC because it charges a 2% management fee. You don't really know if they have Bitcoin there. I assume they do, but you don't actually have control of your Bitcoin if you own this. It's a decent vehicle if you want to own Bitcoin in an IRA. It's a very easy way of doing it. But if we look at who is, so as we've said, GBTC, this trust, the Grayscale Bitcoin Trust, is buying up 150% of new Bitcoin. Now, who is putting their money in this trust? Who is really driving this? I always assumed it was retail investors, but I was surprised to learn from this article that back in 2018, 57% of Grayscale's customers, so investors in this trust, 57% were institutional investors, but that is really flipped in the first quarter of 2020. Now, the vast majority of Grayscale's customers, so those who are putting money in the trust, which the trust then uses to buy Bitcoin, are institutional investors. So even while Goldman badmouths Bitcoin, there's huge institutional investor interest. This is a fairly easy way for institutions to buy it. They don't have to worry as much about the custody of the coins and how to store it, which can be difficult. But I would suggest that the really smart people are not the junior analysts at Goldman, but the institutional investors who are investing in Grayscale. And then, of course, people like Paul Tudor Jones, whom we've spoken about, who is just an absolute legend in terms of his returns and his prescience. And as we learned at the beginning of May, he's been buying Bitcoin as a hedge against inflation. That's all you know. That's all you need to know about this Goldman report, where it says does not show evidence of hedging inflation. You can side with Goldman. I'll have put my money on Bitcoin and on Paul Tudor Jones. So hopefully you guys found this helpful. If you did, hit the subscribe and like button. and let me know what you'd like my next video to be about. In addition, if you have any questions or comments, you can drop them in the comment section below. Thanks a lot for listening, and I'll see you in the next video.